Good evening, all. This is Shay Horowitz, ShogunTrading.com. We've put together this video because we've realized that quite a few people are not comfortable with going short on the stocks or short on the market. Just do not understand the mechanics, or just don't understand how what shorting is all about. The market has been in a great downtrend for quite a while. We went S&P 500 went all the way from the 1500 level all the way down to the 676. And if you're not able to short, at least you have a way of taking advantage of the short side, and that's what this video is going to be all about. Shorting to me is very natural. If you come from the commodity side, or if you come from the future side, for you, shorting is just the same thing as buying. You do it just as much. As a matter of fact, about 80% of my trading, personal trading, is on the short side, just because a short side provides so many more benefits over the long side. Short side declines that usually involve panic, and panic create great momentum, and great momentum creates great profits. So if you're a trader on the short side, that works out pretty well. Also, from the commodity standpoint, there's gold and there's oil and there's so on, and you can take a bet that the gold will go up. But you can also take a bet that gold will go down, or that oil will go down, or that corn will go down. And it's completely natural for you to take a bet on a negative side of a commodity contract such as that. Oil came down from the 145 down to the 40, and it was a great trade if you went short. And it's more natural, and people it's very acceptable. It's not quite as acceptable to short stocks, because most people think it's un-American. Most people think it's just not nice to go short on stocks, because you're supposed to buy and hold stocks. But the whole concept of buying and holding stocks for the long term kind of went out the door. If you look at a monthly chart of the S&P 500, for example, if you bought and held stocks since 97, you lost everything. And that's not what we want to do. I personally don't believe in that type of education. I don't believe in that type of a stigma to trading, to investing, that you have to buy and hold. I believe that every company is allowed to go up. I believe every company is allowed to go down. Companies are liars, as we've seen over the past few months with Lehman Brothers, and with Bear Stearns, Washington Mutual, Wachovia. Hedge fund managers are liars. So whenever they come on TV and they say, we're such and such, we're doing great, we're liquid, and so on, you don't have to believe them. And that's why I don't mind going short on stocks. I think it's completely natural. I think it's completely okay. This is a 60-minute chart of the S&P 500. We'll go back to the daily chart. Now, what's involved in shorting? The actual mechanics of shorting is you actually don't own the stock itself. You actually have to go and borrow it. And it's the same thing as let's say you have a car, and I go up to you and I say, listen, I need to borrow your car. And I go and I go sell the car for, let's say, for $20,000, and you only wanted, and then the value of the car goes down to $10,000, and I give you back $10,000, and I keep the profit. That's basically what shorting stocks is. You go and you borrow the stock from the clearing agent that actually holds the inventory of stocks. You borrow it, you put it in your account, you sell it. Let's say you sell it for 30, and then the value goes down to 20. You buy it back for 20, and you give it back to the clearing agent, and you keep the profit. It's the same thing as buying, only you're selling something that's not really yours by borrowing it first. Now, there are different clearing agents out there. Every broker has a clearing agent. Some brokers are self-clearing, of course. They can buy inventory from different people as well, but they all have different access to inventory of stocks. Somebody actually has to own the stock on the long side in order for you to be able to borrow it and short it. That's why sometimes you're not able to short some stocks, because your specific broker, your specific clearing agent does not have any available on to borrow and go short. And of course, we have a couple solutions for that, but I'll get into that in a minute. First of all, I want you to look at shorts. Here's MGM, for example. MGM Mirage is a company that operates with a ton of leverage. I'll go and put it on the 60-minute basis, and you can see that we called a short at 788, and it went all the way down to below $2. That's a tremendous amount of profit. So you borrow the stock at the 788 level, you sell it for 788, and you're okay. You're okay, and then around $2, you buy it back and you return it to your clearing agent, and you're doing well. The same thing with AFL. Aflac also, from 2007 all the way down to the $10 level. There's a tremendous amount of profit in these kind of trades. Let me show you another one. International Paper. You borrow it at 759. It went below $4. Went down to the 393. It's a tremendous amount of profit, a tremendous amount of opportunity. Let me see. TXT also is another one I want to show you. That also from 609 all the way down to below the $4 level. Let me see which ones. Oh, what else I want to show you? CVT. Oops, CTV. There you go. Also another one, and this one gapped on us, but it was still a great trade. From 1239, we entered after the gap, and it went all the way down below 7. These are just a sample of the type of panic, the type of trades that you can do if you are going to do the short side. It's absolutely tremendous. So if you cannot borrow the stock to go short, if you try to short the stock and it says the stock is not available, you have some options. You can go to a different broker if you have several accounts, and a lot of our clients have several accounts because they want to be able to access inventory, different ones. You can call your broker and you can request the stock. You can request to borrow the stock. You can look at the same sector and find the stock that's in the same sector. The chart looks almost the same. It is available to go short, and you can short that one as well. That's the sectors. Now, there's one more point I want to talk about. That's the uptick rule. Everybody now is talking about bringing back the uptick rule, and frankly, I don't care. It doesn't matter. I don't think the uptick rule makes any difference whatsoever to for us as far as shorting is concerned. I frankly like shorting with the uptick rule because I like to short. I like to sell to buyers, and I like to buy from sellers. So I don't like to beat up stocks as they go down. I like to wait for them to bounce up a little bit, and then I go short, and then it comes down. So do not worry at all about the market changing when they take away the uptick rule. I think it's more of a scapegoat. I don't think it matters at all. It's the same if you remember back in around September, October, they took away our ability to short financial stocks, and the financial stocks still took a dive. It doesn't really matter. They could not manipulate the market. They could not prevent the market from finding the real value of stocks. So that's why I don't really care about the uptick rule. Just to clarify, the uptick rule basically is you have to short only when the stock goes up just a little bit. When it actually shows an uptick, that's the only time they can actually go short instead of beating it up on the way down. Most of the time, we trade very well with the uptick rule. I'll give you an example. Here's MGM, and it broke once, and then it went up, and that's usually when I go short. And then it came down, and then it came back up, and that's you can go short. And then it came back up, and you can go short. There's absolutely no reason why a short an uptick rule will prevent us from doing any of the stuff at all. So anyway, just to summarize it, the short side has a lot of benefit. The short side has a lot of momentum, has a lot of profits, and you have to learn how to go short. You have to accept the fact that stocks are commodities. And stocks go up, stocks go down, and you as a trader has to decide which way the stock is going to go, and you have to go with it. And the short side actually has more profit than the long side. Do I think there's a lot of shorting left? No, I think we're pretty close to where the market is going to start looking for a bottom, but I still think that it should be part of your arsenal, and you should do well with that. I'm going to do 2 more videos, one about using options to go short, and the other one about ETFs, which is another issue that I have to address. Anyway, I hope you enjoyed. I hope you learn to go short. I hope you benefit from this. Take care.